This is a short video on the tax implications of gifting cash. I opened my email this morning and a client had a question regarding gifting in my email, and this is exactly what it said. My dad had a life insurance policy in which I was the only beneficiary. I'm not sure why my brother wasn't on there, but I'm going to be splitting it with him. The total that I will be giving him is $48,000 approximately. Are there any tax implications with that? I'm reading there is a $15,000 gift allowance each year without being taxed. Is there a way I can get the full amount to him without being taxed? Thanks for your help. Well, first of all, wow, what a generous sister you are. But essentially, when you're giving away money, you can give away as much as you'd like without any tax implications, at least until you get into the millions of dollars range. So you can give away about as much money as you would like. There's no tax for you to pay, there's no tax for the receiver to pay, and no one gets a deduction either. But if you're giving away more than your annual exclusion, which as you noted, in 2019 that's $15,000, you're probably going to have to file a gift tax return. So when you pass away, you normally have, right now it's about $11.5 million that you can exclude from your estate without any taxes. And when you give away more than your annual exclusion today, that uses up some of the exclusion you would normally have at death. So if we use your example of $48,000, that's $33,000 more than your annual exclusion. Fine to give it away, nobody has to pay tax on it, but you do have to file Form 709, the gift tax return form with the IRS, letting them know that you gave away, in this case, $33,000 more than your annual limit, and that you're using up $33,000 of the exclusion you would normally have at death. So filing a gift tax return isn't that big of a deal. Again, it's Form 709. It's due the following year, April 15th, the year after you've given the gift away. And you essentially just have to say what you gave, who you gave it to, and what the value of that was. Now there are a few ways that you can avoid the gift tax return, even though it's not really any big deal. But you can split that gift up in time, you can split it up amongst the givers, and you can split it up amongst the receivers. So for example, if you're wanting to give $48,000 to your brother, you could give $15,000 this year, $15,000 next year, etc. until you've given him that $48,000. That would be dividing it over time. You could also divide it amongst the receivers, as I said. And what I mean by this is if your brother is married and maybe has a couple of small children, you could all at the same time give your brother $15,000, give his wife $15,000, and in this example that would leave another $18,000, so you could give each of the children $9,000 all at the same time to equal your $48,000. The third option is to divide it amongst the givers. So if you're a married couple, you can divide that gift amongst the two spouses. So essentially, you could give your brother $15,000 and your husband could give your brother $15,000. You could give his wife $9,000 in this case, and your husband could also give the wife $9,000, and that would equal your $48,000. So if those timing strategies and division strategies just seem like too much trouble, more effort than what they're worth, they may be. And like I said, filing a gift tax return, Form 709, is pretty simple. I would just go ahead and give the money, file the return, and move on. Now again, if you're giving anything other than cash, you need to seek additional advice because there are some other implications when giving property. So this is dealing with just strictly giving cash.